Welcome back, everyone. Welcome to this week's Mastering the Markets with me, Matt. As you guys all already know, I'm a senior analyst at PrimeXBT, and I'm super excited to be here with you guys trading for the year 2025. Things are going to be looking really exciting. There's a lot to kind of unpack. We've got obviously Trump's inauguration coming in shortly throughout the rest of the year. And obviously that is going to bring a lot of volatility to the market, especially considering there is a lot of attention around him right now. We've already seen in this first week back in trading how the markets have already started to get a little bit shaken up due to a couple of policy mentions that he's brought to life. So it's going to be quite interesting to see exactly how making is going to come into effect. It's also going to be really interesting to see how the market reacts to these events and how these events actually kind of unpack sort of the next couple of years ahead of us, especially from a trading perspective. Now, we also know that the Federal Reserve cut interest rates by 0.25% at the end of the year. So we also have a lot of information still to come out throughout the rest of this year. It's really cool to be with you guys from the start to the finish. And I'm really excited to see what sort of the markets have in store for us. We also know that cryptocurrency has been on a really great run over the last couple of months. And we are kind of entering into that phase of, pretty much, the last sort of run before potentially a bear market sort of catches us off guard. But I think for the most part, there's a lot of dive into, and I'm quite eager to kind of get into it, get stuck right into it. I'm going to kind of go through a couple of charts, have a little bit of a more higher time frame analysis session with you guys. Not necessarily going to look to execute anything today, but rather just have a little bit more of a forecasting session with you, going over a couple of events that I think are really key to understand and be prepared for, and then also obviously taking into account a couple of asset classes. So we're going to look into both cryptocurrency as well as global markets today. I think that's going to be really exciting for both you as a user and a trader. And obviously I will take you around the platform a little bit later on, just so to show you a couple of things if there is anything that you may or may not know. So the first sort of event that I think is quite key that we should keep our eyes out on, and that is going to be the non-farm payroll data results that are coming out on this Friday, the 10th of January. Now, remember, we had a lot of attention placed on the labor market data last year, especially to the back end of the year, considering the Federal Reserve was obviously needing to take into account the labor market data. They said they were quite eager to kind of support it in some way. And we've obviously seen that throughout the rest of the year, the labor market actually held quite steadfast. We had 1 month that was a bit of a shakeup, and that was mainly due to the hurricanes that happened in Florida. But other than that, the labor market seems to be doing quite well. Now, I think a really key important data point to watch is our inflation data results. So that's going to be specifically the core CPI data results that I'm going to be eagerly watching as well. So let's head over into a couple of the charts. I want to also just show you a couple of things in a more live zoomed in sort of focus area, so you can also get a better understanding of what I'm talking about. But for the most part, what I really want to kind of dive into is pretty much how you can use our platform to your advantage, how you can use the different features we already have on the platform and are potentially adding to the platform in the near future, and how you can kind of impact or sort of take into account all of this research that we have for you as a trader, and how you can kind of use that to your advantage, right? So this is the main PrimeXBT website. If you have a look over here, I'm actually on our economic calendar right now. So you can find that by simply clicking on the tools section. If you scroll down to the bottom, you'll be able to then see our economic calendar, which will look something like this. And if you have a look here, this is just simply how you can kind of filter around on it. So for example, let's say you're only interested in, say, data points from the US, you can just filter down and it'll look something like this. So you can already see today we have ADP's non-farm employment rate change that's coming out later this afternoon. Now, they are obviously closely related to the NFP data results coming out on Friday. However, it's not necessary to say that this data point coming out today is going to be exactly the same as the data point coming out on Friday. The two could be completely different. The two could be in complete alignment, or we could see complete misses from both angles. So today's data point, I would be aware of it because obviously it's an important news event that is coming out later today. So there will be a bit of volatility stepping in, especially considering the new year has just started and we are still waiting for a lot of data points to kind of filter in. So that is going to be quite a key one to watch. I am quite keen to see how the data points actually come out. We've got current non-farm employment rate change coming in at around a forecasted 164,000 jobs. Now, previously in December, they posted quite a whopping figure of around 227,000. So it's going to be I'm quite eager to see, if this data point is going to come out in alignment. Obviously, we know over the festive period, the Thanksgiving period, there's a lot going on. A lot of people are on holiday. A lot of companies are obviously taking quiet time. So maybe that's why this data point might not necessarily be showing, say, in alignment for the previous month, or potentially, greater results. So I wouldn't be too worried about how this data result comes out. Obviously, we know non-farm employment rate change does bring in a lot of volatility and does bring in a lot of volume on the day. So that's going to be quite interesting to see. So I just want to take you back to our main page quickly. If you have not already seen on our website, next to where it says tools, you can find our learn and research. Here we have a whole lot of market research that we update daily. I post technical analysis, trade ideas. We also have a once a week sort of market breakdown, which is a bit more in depth, a little bit more written content. And here you can also unpack the different things happening from both a global markets perspective as well as a cryptocurrency markets perspective. So those are the two things that I'll be really eager for you as a trader and a user of our platform to keep your eyes out on. You can also scroll through the vast amount of analysis and research that we already have on the platform, and this will obviously be updated continuously throughout the year. So keep your eyes out on that. Keep your eyes out on our Telegram group, where I post sort of updates of these charts analysis, as well as various other research coming through. That's definitely where you're going to get the sort of insights that you might be looking for. And let's just kind of get back into it. So the one thing I am quite keen on seeing is specifically to today's actual meeting forecast is going to be that FOMC meeting minutes. Now, remember, these meeting minutes are kind of a recap on the result that happened mid-December. So they're going to pretty much explain why they cut interest rates the way they did. And they're also going to explain potential hurdles or factors that might be sort of impacting, say, the first quarter of this year, and potentially what this might look like with regards to Trump coming in, etc. So keep your eyes out on that. We have the first official Fed interest rate decision meeting happening later this month. I think it's on the 29th of January. So you can pretty much go to the Federal Reserve actual main website, and you can go through there to find all the different data results. We will also keep you up to date based on the results, and we'll also keep you up to date on what the potential outcomes or sort of impacts these results may have. So enough of the sort of fundamentals. Let's dive right into the technicals. Let's get stuck in. So the first thing I want to actually look at is Bitcoin itself. We had quite an interesting, say, festive period break. Price action didn't show much momentum from both sides. I think, running into the first sort of week of trading in the year, we saw price action finally trading back above 100,000, and that was pretty much since Monday. And we've pretty much had about 5 days worth of sort of bullish momentum to the upside being wiped out in the last 2 days. Now, a lot of that sort of comes off the back of Trump saying that he's going to potentially, implicate sort of tariffs on every single country. There's a lot of things that he is going to say throughout the year that may impact the way in which the markets trade, and obviously they will flip on a dime. That's something that you just cannot control. However, you need to be aware and try and keep up to date, and I will also try and keep you up to date on what I am seeing throughout the year. So if I have a look quickly now at BTC, if I look at this on the weekly time frame, we still have these areas of interest below, say at around $80,000, that we could potentially see some sort of whipsaw into before we then continue to trade higher. I've kind of just taken a bit more of a high time frame approach on this, purely because I want to see how price action is going to develop during this whole inauguration of Trump. Is this a bit of a buy the rumor, sell the event sort of scenario that we might be having, or are we going to see a bigger push in the crypto market space, we've obviously seen Bitcoin climb to some crazy highs of around $108,000. And we're still kind of waiting on the altcoin market to some degree. We have seen a lot of altcoins kind of pick up their feet a bit, move into say higher sort of areas of interest, etc. But now, do we kind of see that flip that I think a lot of people are, or especially a lot of crypto traders are trying to anticipate? And that's kind of that flip between, we see price action for BTC stalling a bit, consolidating, maybe potentially pulling back a bit, and that money flowing into say the likes of altcoins, etc. For the most part now, what we seem to be seeing is that when BTC is actually pulling back, so are the altcoins, so are some of the lower cap cryptocurrencies. So we're not necessarily seeing that change or that sort of correlation, switch. However, we are still maybe seeing, a bit more sort of correlated moves between BTC and the rest of the cryptocurrency market, more specifically the altcoins. So I'm going to be quite keen to see potentially on this is on the weekly time frame for Bitcoin if you've just joined our stream. And if you have a look over here, I wouldn't be surprised if we had a bit of a pullback before we traded higher. Now, I've shown you guys in previous streams that these are tools that I'm quite fond of. Basically, this is just a Fibonacci tool that allows me to kind of measure price between say a high and a low. So for example, if I was in a buyer's market now, which we are bullish on BTC at this current point in time, I would only really look to try purchase something below this 50% level of the Fibonacci tool, right? That will give me a bit more of discount on the current price action. Now, if price does drop from here to around $80,000, that's only around a 17% move to the downside, which is not that big in terms of say some of the pullbacks we've seen in the past. We know that during the bull market we do see these whipsaws, we do see these healthier corrections that are most likely then bought up and then continuing to the upside. So if something like this does happen on Bitcoin, I wouldn't be completely alarmed. I wouldn't be too stressed about it. We have obviously already seen quite a nice pullback from the high of around 108 to say the low of around 91. That almost was about 15% roughly in terms of drawdown. And if we do pull back into say this region here, that's only really marking say around a 27% decline from the high, the all-time high, which we have seen in the past. We have seen pullbacks between 20 and 30% during the bull market happen. And I think a lot of people do get a bit panicky when that happens, but I wouldn't be surprised if something like that did happen. I wouldn't be too stressed about it if it did occur. However, those are great opportunities to kind of potentially either scale back into the likes of BTC. We might also see BTC doing this move back to the downside, and then say the likes of altcoins kind of, moving back to the upside. So and there, how do you manage emotional decisions when the market is so volatile? So for me personally, what I try and do is kind of set and forget. So I have a plan in terms of how I'm going to manage a position, how I'm going to sort of trade the market and kind of potentially, have a longer term outlook on things. So from an emotional perspective, I try not really get married to a bias, if you want to call that. So yes, great that BTC has been on a great run. It's been on a run to the upside, pretty much since Trump has come in. We haven't really seen too much of a pullback. So it would be silly of me to assume that we're just going to continue going higher. Hence why I always try and look at both sides of the market. If potentially pullbacks do occur, cool, I'm prepared for it mentally in my head. So the emotions are not necessarily going to affect me as much. However, if you're not seeing the potential of a potential downside swing and you're only looking to the upside, when that downside swing comes, it will emotionally catch you off guard because you weren't prepared for it beforehand. So preparation is key with anything in life, and especially when it comes to trading. That's exactly what I try and do. I try to prepare for both sides of the market. I try kind of position myself and look to kind of scale in areas where I think it is a better time to get in, or whatever it may be. So that's where the likes of using PrimeXBT is really handy. because, for example, if you are, say, spot holding now in BTC and price does turn against you, you can look to enter, say, short positions, which would then obviously net deficit or hedge yourself from any adverse momentum to the downside. Obviously, if price action flips on the dime and continues to the upside, your spot holdings are going to grow, but then you will obviously get stopped out of your actual CFD position. So that's where CFDs are quite handy. You can obviously be in the market from both sides, and I would definitely potentially want to be more of a hedging bias rather than long, and then I get whipped out because I wasn't really prepared for a potential pullback. Now, not to say that this is going to happen. However, that is what I would look for. You know, we could potentially just be bouncing off this daily 50 EMA right now, which also kind of aligns with, say, this break on structure over here, which we've kind of supported or held quite well, say, on the lower time frame. I know daily time frame is still quite high, but I wouldn't write off a potential move like this back to the upside. We could just be bouncing from here and then you continue back to the upside. But for me personally, considering price has already moved quite high and we're sitting in this consolidation phase, I wouldn't be surprised if we do get some anomaly sort of pullbacks or dips lower. Those are going to be fast or quickly bought up. We've seen those whipsaws happen in the past. So if I was to say continue to the upside or look for potential buys, I would only really want if I get a confirmed break and structure to the upside over here, and then I would potentially look to play longs back to the upside. But for me personally right now, it's very difficult to gauge exactly where we're going to go from here. I do see the potential possibilities of price going lower. I also see the potential possibilities of price pushing higher. So that's where it kind of comes down to, okay, cool, I'm prepared for two options. If either of them happen, I'm happy with whatever the outcome is. And that's all really what you need to try and do as a trader. You need to prepare yourself for both scenarios. You need to be mentally prepared for that. And then when they happen, execute on that. Don't get scared. Don't necessarily try and doubt yourself. Volatility periods are kind of coming. That's pretty much what I would be interested in. You know, if we do start to pull back here, I wouldn't be surprised if we just dip our toes, you know, which would then kind of look something like that. And, you know, we pretty much clear out all of these lows over here. And then, you know, we just see some sort of whipsaw action back to the upside. So, you know, there's two different arguments that could be made. We could just be finding ourselves in this consolidation period over here, which I think is actually really nice. So, you know, if this is my range low over here and that's my range high, wouldn't be surprised if we kind of chopped around this range a little bit longer, and then, you know, we either manipulate to the downside and then continue back to the upside, right? So that's quite a common pattern that we've seen in the past with the likes of BTC, and you can pretty much see that here. So if you have a look over here, you can see how we were consolidating pretty much. That was almost for about 6 months that we consolidated in that area, and that was all pretty much pre sort of Trump getting elected as the president. And then obviously once the market had figured out exactly you know, sort of the direction in which we were going to go to, continuing with, say, the new president-elect, then there was obviously a bit more confidence in the market and we pushed the upside. So basically, if you have a look here now, I'm actually just trying to show you this quickly. So you can see how range high over here, let's say that this was my range low over there. You can see how we pretty much came into this area, we chopped around, we took this low, we started to chop back higher. Do you get what I'm saying? So we almost pretty much, we took this range low once, we took it twice, and then only on the third time did we really start to see it move to the upside. So hence what I'm saying is that we could be just finding ourselves in this range over here, and we might, you know, trade in and around this range for the next couple of months. That's why I'm saying anything can happen from both an upside or a downside perspective. It's just about how you prepare yourself. So I wouldn't be surprised if maybe this is our range high and range low. and we just do something like similar to this for the next couple of months, maybe the first quarter or so. We just chop in and around this area before we potentially start to trade higher. So just keeping in mind where we are in terms of the cyclical times too. We're kind of getting into that last sort of, phase of the cycle where there's about 6 to 12 months worth of trading action where potentially prices are going to start popping. It's going to be quite interesting to see if we get that sort of momentum and if the cycles kind of follow how they have played out in the past. So that's my thoughts on BTC. Right now, I'm very sort of unbiased to where I think we might go. I do think that we might range in this area a bit longer before we potentially push higher. And if we do range in this area, that would be great for the likes of altcoins, because if we do start to see that money flow coming out of the altcoins, then potentially we can look for some more upside in the likes of our bigger sort of caps and some of the lower caps that are still stuck and haven't moved. So similar to how the price action of BTC looks now, if you have a look at Ethereum, we actually have not even reached new all-time highs yet. This is pretty much one of the sort of assets that has obviously seen a great sort of interest since the hype of meme coins coming into the ecosystem. Obviously, a lot of the platforms that are allowing traders to kind of buy these meme coins are obviously having to kind of exchange into Solana, and hence why we are seeing the price action of Solana really outperform Ethereum currently. So I would be quite keen to see how price action reacts out of these areas. I wasn't suspecting this resistance area to hold the way it has held already. I thought, if anything, from this momentum shift that we had around here, I thought that potentially we would see that high break, which was around our March 2024 high. I thought we would maybe see a push a little bit higher than this, maybe sort of finding ourselves stuck in this area over here, and then potentially looking for, say, a move to the upside thereafter. Now, not to say that that might not happen now, but I was quite interested to see if we could potentially tap into this resistance area here, sitting at around $4,700, which also kind of aligns with previous all-time highs. So we might just be also finding ourselves stuck in a bit of a consolidation period over here, and potentially we might see price kind of pop into here, trade a little bit around like that, and then we start to see some sort of momentum like this back to the upside. I would be quite interested to see if Solana can do something. Ethereum can do something like this, purely because I think this is one of the lagging altcoins, especially from a higher a higher cap perspective. So that's kind of my thoughts there on Ethereum. I think it's going to be really key to also watch the BTC ETH chart to see if ETH starts to kind of dominate BTC back to the upside. That's also a great sort of indication in terms of potential altcoin moves to the upside. So if we have a look here, this is our total 3 market cap, right? So this here is pretty much the total market cap of Ethereum. So that is pretty much any asset class you can think of besides BTC and ETH. And this has been quite an interesting chart to watch, because we've actually traded into new all-time highs from a market cap perspective. I think we hit our high of around $1.16 trillion, which is amazing to see. And I think this is going to be a very, very, very key indicator to watch for the likes of those altcoin moves to the upside. That's going to be quite key to kind of keep your eyes out on, and potentially see how price action can kind of move back to the upside thereafter. So that's what I'm looking at from an altcoin perspective and a cryptocurrency market. I'm going to head over now to the actual global market side of things, and I specifically wanted to touch on gold, which I'm actually busy with a write-up for today's articles, which I will send through shortly after this live stream with you guys. But this is quite an interesting asset class, and is always really something that is really important count when trading such sort of high volatility events, such as the presidential elections, the wars that we had going on, etc. This is a really good asset class to kind of be in if there's a lot of uncertainty. Right now, I wouldn't say that the uncertainty in the market is as high as what it was last year. I definitely think it's calmed down a bit to some degree. However, if things do start to pick up again, I wouldn't be surprised if we saw gold then push into new highs and potentially trade into around $3,000 and potentially higher. So right now, again, very difficult to put a sort of bias on where I think gold is going to trade to from here. I do think that if we see, say, a correction to the downside, these would be some really important areas I would want to keep note of. Potentially this ascending trend line that we have over here. It also aligns with, say, that daily 50 EMA. So if we do potentially, we've also got this resistance area here that we haven't really tested, which we broke through quite convincingly in around August last year. So that also ties in with, say, around this $2,500 region. That's quite a nice area to potentially look into, potentially getting into some buys before we see some, momentum shifts to the upside. If we do see a break above, I've shown you guys this in the past, but if we do see a potential push higher above this all-time high at around $2,800, then I would look to kind of see how we react from there, and then potentially look for some sort of longs back to the upside. So obviously high time frame, very much in terms of a pro trend perspective, bullish on gold, but this will obviously be impacted around certain news events or uncertainty within the actual general market space and the world. So keep your eyes out on that. Really interesting asset to always keep into account at the beginning of the trading year. This can also be used to kind of hedge your bets. So normally when you see the likes of, say, gold pushing higher, you might be seeing equities or different asset classes maybe taking a knock. So if you're hedging yourself, for example, in this scenario, and you, let's say, for example, had some sort of gold positions, you can then counterbalance, say, the net loss that you would have effectively had on the equity side. So that's something I would look into from a trading perspective. If we do start to see price action kind of trading into, say, stronger areas of interest around 2,800, I wouldn't be surprised if we then push to around, if momentum picks up to the upside. Okay, so that's it from a gold perspective. The S&P 500, also something very similar. You can kind of see, if you look at the market from a holistic perspective, if you look at it from Bitcoin, gold, S&P 500, the dollar index, we are sitting at really relatively highs, and we're sitting at some pretty decent all-time highs that we've obviously made, throughout the trading year of 2024. It's quite a strong year. We also saw price action really strong since 2023. So if you have a look here, for example, since the beginning of 2000, any decent pullback on the likes of the S&P 500, we've only just seen upside momentum, almost 60% in the last 2 years. That's really strong. I think you can be quite proud of yourself if you have been positioned in the S&P 500 for the last couple of years, to kind of take advantage of a 60% move in the stock market from an indices perspective is really good. And I think we need to be aware that there are sort of the possibilities that we could see these pullbacks. We obviously have had pullbacks throughout that period. We had one over here, we had one over here, we had one over here. So I wouldn't be surprised potentially pull back on the S&P 500. It's not going to be into crazy areas of, say, you know, $2,000 or whatever it may be. It could be, but I would be interested to see if we do get pullbacks, you know, into something like this, and then we potentially look to trade higher, right? So that's around, say, $5,500 or so. I would be more interested to see how price action kind of unfolds in the event that, you know, we do see price action moving quite swiftly to the downside. So something like this on the S&P 500, yes, this is quite a big area of interest over here. Sure, you know, it's not as clear as what this was over here, but I wouldn't be surprised that, you know, we often see beginning of the year. So if you have a look here, this was around, you know, Jan, Feb, March. We had quite a nice push to the upside. Then we had some sort of small correction in the beginning of Q2. And we had another small correction in the beginning of Q3. So maybe we get a small correction now in the beginning of Q1, which then again sets you up for the rest of the year in terms of price action momentum back to the upside. So hence why a lot of the assets that I'm covering today look like they are at all-time highs and look like they potentially could pull back. And I wouldn't be surprised if maybe Trump coming into election now with his inauguration happening on the 20th, if that doesn't create that sort of sell-off that potentially we are looking for right now, which then gives us the potential opportunity to kind of position ourselves for the rest of the year. So if that is the case, then great. You know, have your funding sitting on the side ready to go, and then obviously play the markets how they, you know, present themselves. So I like to trade what I see. I don't really like to trade what I think is going to happen. It's impossible for me as a trader and an analyst to predict what Trump is going to say tomorrow, or what the Fed's interest rate decision is going to be in a month from now or in a quarter from now. So rather just trade what you see. If we do get a pullback, cool, that's what we are looking for. I'm happy about it, continue to the upside. Or if it's a real dramatic sort of pullback, you know, then just gauge volatility, gauge what's, you know, causing those pullbacks to happen, and just come to a sort of, you know, a smart decision on whether you think you want to position yourself back in the markets. You know, if some of our data points start to unravel really badly and we get the pullback, you know, fundamentals are maybe telling you, hey, this is not good, you know, but you've got the discount. So I got the discount. Now I want to get back in. So I get back in. So that's what I'm saying. Like, try keeping into account all factors throughout your trading sort of journey. Don't necessarily just be married to a bias because we're so bullish on Bitcoin, gold, S&P 500 that we can only go up from here. No, we can go down. We have seen price action in the past go down. We have seen traders lose funding. So in scenarios like that, it's really key to kind of be sitting with a clear mind and really play it as it happens. Don't necessarily try and think or predict what's going to happen, because you're not going to be able to predict what's going to happen. However, you can make smart decisions when things happen, take into account a lot of factors that might be impacting that sort of sell-off or whatever it may be, and then potentially position yourself thereafter. So I do think with Trump coming in, it's going to be good for the markets in general. We're going to see the US market kind of pump off the back of the tariff implications. You know, we know that he is in the US, so that US economy is going to thrive off him coming in and the sort of potential policies, etc., whatever he may implement. It's definitely going to be in favor for small businesses in general, because he is a businessman. So taking into account information like that, you can already know equities are most likely going to push up with him throughout the year. And it just depends on if there are actual real sort of underlying fundamentals cracking and breaking down for you to kind of change your bias based on that. So I'm kind of banging on about this, but yeah, that's pretty much in a nutshell what I'd be looking there for on the S&P 500. Euro dollar has been quite interesting. We've seen a lot of sort of dollar strength in the last couple of months, especially since Trump has been announced that he will be obviously the president. So I wouldn't be surprised if we continue to see dollar strength, and if we do see dollar strength, I wouldn't be surprised if the euro dollar continues to trade to the downside. So let's see how these sort of fundamentals all kind of pretty much come into play, and let's see how sort of these technicals will kind of unfold. Obviously, this is our first weekly session back with me, and we're going to be doing these every Wednesday. So I'm going to keep you up to date on what I'm seeing. I'm going to keep you up to date daily on technical analysis chart ideas. I'm going to keep you up to date on our Telegram group as to what is fundamentally happening. So I thought today, let's just rather use this as a breakdown session, have a bit of an overview, have a bit of a discussion, free-flowing discussion about, what sort of potential possibilities could happen. And then thereafter, if we're stuck in the actual active trade, also quite slow, everyone kind of coming back into the markets. So I hope you guys have enjoyed today's trading session with me. I really appreciate the support. I could see there was almost 400 or 500 viewers at one point. That's really awesome to see. And you guys obviously know that we have our competition running for any questions that you may have. So keep the questions coming in. This is your last sort of second to get your question in if you are typing it out. And yeah, I really want to just say Happy New Year to everyone. I hope you guys had an awesome festive period if you were celebrating it, and let's get stuck into trading for 2025, and let's everyone kind of make the most of the opportunities presented to yourself. So that's enough from me for today. I will keep you posted on the daily results for NFP coming out on Friday, and I'll catch you guys in next week's stream. Cheers.